Good morning, everyone, and welcome to Pureprofile's Q4 FY23 investor briefing. My name's Jane Lowe. I'm the Managing Director of IR Department, and I'll be your host for today's session. Joining us today is Martin Fills, who's Pureprofile's CEO and Managing Director. Good morning, Martin.
Good morning, Jane.
Morning. And also with us is Melinda Shepherd, who's CEO and CFO. Hi, Mel.
Hi, Jane. How are you?
Very well, thank you. And today we also have the pleasure of having Pureprofile's recently appointed chair, Linda Jenkinson, with us. Good morning, Linda.
Good morning, Jane.
Morning. Thank you for joining us. So for those of you that don't know Linda, she's a real pioneer as a founder and CEO of high growth businesses, having founded multiple companies over the last 20 years, including being the first women founder and CEO to list a company on NASDAQ. Linda's also currently chair of ASX-listed MedAdvisor, Jackstar, and non-executive director of Fleet Partners Group, and she's a former non-executive of Air New Zealand. So the format for today, Martin and Mel will walk you through the results update released this morning, which is on the Pureprofile website and also on the ASX. It should take about 10-15 minutes. And following that, we'll have a Q&A session where Linda will also be available to answer your questions. As a reminder, if you'd like to ask a question, you can do so by typing it into the Q&A tab in the ribbon at the bottom of your screen. But for now, I will ask Martin to kick off the screen share and pass the floor over to you and Mel for the presentation. Thanks, Martin.
Thank you very much for joining the call. Thank you very much for having us on. I can't believe this is now my third financial year, so I'm really excited to do that and how time flies. And it's great to be with you all where we can talk about another record revenue year for Pureprofile, as it says here, 43.7 million for the continued business. Interesting fun fact, the year before I joined and the year before we did the recapitalisation and the restructure, the continued business was actually 18.9 million. So great to see that continued growth that we've had over the last 3 years, and it's continued to be strong growth. That strong growth is 23% up for the year, and it's a combination of growing share of wallet in existing clients and bringing on new clients, as we've got there. That's 791 clients, up from 721 clients a year ago. So great to see that. Also, number of initiatives that we've been making, we're seeing that EBITDA expansion continued, and so we've got 28% growth in EBITDA, up versus 23% growth in revenue. So that is internal initiatives, new clients, new ways of working with clients, ways that we're working with suppliers, a number of different initiatives coming through. So great to see that. 38% growth in our platform revenue, with both new audience builder clients coming through and again expansion of existing ones, and that's certainly contributing nicely to that EBITDA expansion that we're seeing. Cash is up to 4.7 million at the end of the year versus 4.1 million halfway through the year, and again seeing that we're being prudent, we're being cautious within the economy. We talked about that about 6 months ago, and so cash is king, so protecting that and seeing that grow, which is great. Our international revenue growing at double the rate, rest of the world at 35% versus ANZ, the established market at 16%. Those were those investments that we made Q4 in financial year 22, seeing those paying off throughout the year. And then the other point, we closed, which again we announced in April, closed that unprofitable Pure Amplified business, the media business, which allows us to be absolutely focused on data and insights. So all in all, very happy with those. If just a quick summary looking at the 23 strategic achievements that we're calling out here, and some of these I've obviously mentioned in what I just talked about, but that investment we're seeing around in the world where we have a low market share, bigger markets. I've talked about that. The UK 14 times bigger than the Australian market, the US 40 times bigger than the Australian market, but it's exactly the same way of working. That investment that we're seeing is paying off, and we're leaning into where we have that absolute low market share. We opened up a new office in Indonesia, new commercial office in Indonesia. So that expansion from our initial base a couple of years ago, 2.5 years ago now, in Singapore into Southeast Asia. And then a brand new US client, which was 0 revenue last financial year, has come flying in and is now one of our top 5 clients. So again, that demonstrates the size of the market and also demonstrates that it's totally exportable, what we're doing today in Australia, and what has made us a market leader here. Audience builder partnerships, key strategy for us, which enables us to quickly move and grow in existing markets, and also grow, see that expansion of the EBITDA percentage. And that is a key focus on Southeast Asia, but really the US and UK as well, bringing in those partners to give us that revenue step change. We signed a couple of new partners in the year. So Shopback in Australia, their main base is actually in Southeast Asia. So do a good job in Australia, and then we can get invited to expand in Southeast Asia, which is great. And then Prograd, which focuses on Gen Z audiences, always needed in the research space in the UK. And that's our first partner in the UK. So really great to see that. And again, a great reference site for us to then grow the partnerships in the UK. We expanded the existing audience builder partners that we have and grew the platform revenues by 38%. So very happy with that. Technology, you can imagine, with Audience Builder being a key strategy, we've done Audience Builder enhancements, making it much easier for partners, set up, reporting and ways of working. We've opened up our core panels to enable direct client access. That means that the clients can launch much faster and much more efficiently internally, and it doesn't have to touch any of our existing team members, either sales or operations, for them to launch the projects and get results. So that will again help us to expand that EBITDA margin. And then also talk of the town. I'm sure you read it everywhere, and it's infecting every part of our life today. When we look at generative AI, artificial intelligence, we've established a group within Pureprofile, and we're looking at it from 2 fronts. First front is internally, what efficiencies can we gain? How can we speed up the way that we're working? How can we work differently using generative AI? And also then externally, what are different client-facing tools, and how can we deliver to clients faster and easier and more efficiently? We set up the team, that was a couple of months ago now, and then actually internally in August and September, we've got the first iterations of us rolling out generative AI as a business internally. So very excited about that and how that can enhance the business and enhance the way that we work with clients. So that's a little bit of an overview, and now I'm going to hand over to Mel, who's going to go into the detail.
Thank you, Martin. If you go to the first slide for me, please. So the first thing I just really wanted to say was how proud we are of the business and our staff during this financial year. As Martin said, record revenue of 43.7 million, and only a couple of years ago we were at $18.9 million worth of revenue. I think it's an outstanding result in what's probably been quite a challenging year for a lot of businesses. Our growth, obviously double digit at 23%, I think is an amazing result from that perspective. So just this first slide, so these results are preliminary, they're unaudited. Our 4E and our annual report will be released at the end of August together. So you should be looking forward to seeing those. I also want to point out that this first slide excludes the discontinued media businesses in both Australia and in the UK that was shut at the very start of FY23. And just to point out, EBITDA excludes significant items. The significant items that we exclude are share-based payments, and there'll also be charges related to the closure of the Pure Amplify business that we've called out of 353,000 that are also excluded from EBITDA. So when we think about this result, and also the key thing really, this rest of world growth of 35%, which is double the rest of the world, it really reiterates that strategy that we've had for the last couple of years of growing outside and investing outside of Australia. And so we're really starting to see this year and in the prior year of that growth coming through from that investment, and predominantly the investment that we made at the tail end of 22 and at the very start of this financial year. Just a quick update on cash. As Martin said, we closed the end of the financial year with $4.7 million worth of cash in our bank, which was up from 4.1 at the end of the half. That's as we signaled that we were going to rebuild our cash balance in the second half of the year. You might recall in the first half of the year, we had a few one-off items that impacted the cash at bank from the first half of the year. And then as we had signaled to our investors and to the market that the cash balance would rebuild over the second half of the year, and it has. So if you go on to the next slide, please, Martin. So this is what we would call our reported results. So this is including our discontinued media businesses in Australia and the UK. And I think, you know, the key thing that you sort of see when you look at this slide is that the decision to shut these business units was the right one. You can see that the growth when you include it in year on year has really gone down significantly from 23% down to 17%. And importantly, that EBITDA result has declined from 28% down to 7%. So interestingly, this business unit impacted us negatively from an EBITDA perspective of 300,000. And when we actually started at the very start of FY23, we'd actually expected that business unit that would have delivered positively to our EBITDA number of 400,000. So the right decision for the business, and it's really helped us now going into FY24 really focus on that core business. So if we go on to the next slide, please, Martin. So talking about just business, so the total business revenue in total over the last 2 years, we've actually had significant compound annual growth rate of 30% over the last 2 years. What we've done here is shown you 21, 22, 23. So we called out FY20 was 18.9 million, 21 to 25.7, 35 million last year, and 43.7. So of our continuing business. So why have we seen this growth over the last year? Well, a number of different reasons. We've got lots of different levers that we're pulling. Being in multi-countries now has really helped bolster that revenue as we're growing outside of Australia in new markets such as Singapore and Europe, in the US, and in our UK region. We've seen good growth from end brands. So that's when we're working with an end client versus working through a research agency. Why is that a great thing for us to do? Well, it typically delivers higher margin projects. So that's fantastic for us to see that growth. Multi-country studies. So this is where we're getting completing projects for our clients, where we're getting completes or survey respondents in multi-countries. So not just in Australia. And I think we've shown in other slide decks previously that in any one given year, we might actually be getting survey respondents from 90 up to 93 countries globally. So those multi-country studies are growing significantly as well. So we've seen a 19% growth in those types of studies during the financial year. As Martin said at the very start, audience builder partnerships are a key strategic initiative for us. And really that growth in that network by getting more survey respondents through our partners such as Flybys, such as Raise. Now we've got Shopback, and we'll start to see momentum through Prograd going into the financial year has really helped deliver that revenue growth. And it also improves our margin because it does allow us to extend our own panels versus having to utilise third-party panels. Another point, and this has been a consistent strategy for us, we've really been focused on our investment in new sales capability outside of ANZ, and that's really why you've seen the rest of the world growing so strongly over the last couple of years with compound annual growth rates of 46%. And that's really helped support the revenue growth in those regions. And it's also allowed us to onboard new clients also. And as Martin said, you know, we're really thrilled that one of our new clients in the top 5 is a client in the US. And that's actually due to one of the new team members that came on board at the very start of FY23 have brought that client in with them. And then just the final point that Martin had pointed out also in his opening slide was really that, you know, we've seen strong growth in new clients coming into Pureprofile during the financial year as well. If you go to the next slide, please. And just from an EBITDA perspective, again, this is EBITDA excluding the significant items. So really, really fantastic, strong growth of 28%, as Martin pointed out. That's ahead of the revenue growth. So we're seeing an expansion in the EBITDA margin of 11%. If we include the media business, that's 9%. So that media business actually had a negative impact of EBITDA margin of 2%. So why? Well, typically it's the strong revenue growth that we've experienced over the last couple of years. We're improving our gross margins because we have our partnerships, our audience builder partnerships. And we really, you know, as we've indicated to you over most of FY23, we've been really managing our cost base tightly, particularly with the slowing of the market at the moment, or what we saw during FY23. So we've been focused on how can we maximise our EBITDA during the financial year while still growing at the double-digit rate. And margin expansion from the benefits that we've achieved from a number of different initiatives over the last couple of years. The global expansion, we've really been focused on maximising our project margins and profitability. And we've been focused on our operational efficiencies and making sure that the way our teams operate are as efficient as possible across all regions. And again, just that final point just around the growth in our audience builder partnerships, really delivering that revenue growth from a platform perspective. And then we've just put in a couple of slides just to, again, show you that the trends that you've been seeing since FY20, same trend with each quarter and each year going up significantly. We've put in the 2-year compound annual growth rate so you can see this consistency in how we've been operating and our results over the last couple of financial years. We go to the next slide also, and just a snapshot of Q4. So really pleasing Q4, 30% EBITDA growth. So you've even seen a stronger lift in that last quarter of EBITDA. So we said 28% for the full year, but Q4 came in really strongly. And that again is because we've been focused on the cost base in that final quarter of the year. And it's really, as we'd signaled to you at the start of FY23, that the EBITDA margin would grow over the year. In Q1, we had investments and that resulted in a lower EBITDA margin, and we communicated to you that over the financial year that you'd start to see that margin climb back up, and that's what's happened in Q4. I want to point out also the platform revenue of 115% in Q4, which is an amazing result also. And again, that's where we're starting to see the run rate continue to grow strongly as we deliver more revenue through our audience builder partnerships, flybys, Shopback that started in May. That's had a really fantastic result on that quarter for platform revenue. We did see, obviously, Q4's a slight slowing from what we've seen, but still an amazing result, still double digit. And we are seeing that the softer market is really starting to pick up as we're going into the start of FY24 now. So that's it. Actually, if we just got one more slide with just to show the metrics for the quarter as well. So you can see the momentum across each of the quarters for the last couple of years, and then the compound growth rates as well. So that's it from me, and I'm going to hand back to Martin just to talk about the outlook for 24.
Thank you very much indeed, Mel. Thank you for the update. I can see we've got some questions in as well, so I'm sure I won't be too much longer. So what are the main things we're looking at? And we'll have obviously more of an expansion in that when we release full year results and then at the AGM. But firstly, international expansion. It's been a core strategy of us for the last 3 years, exporting exactly what we do in Australia and having that key focus in the UK and US, and everything thus far, as Mel talked about, we've invested in has paid off. So having that core focus on international expansion, number one. Number two, audience builder, growing out those partnerships, and it's a great time to be growing out those partnerships as companies with large membership base are looking for insights so they can understand more about their customers and also additional revenue streams. So it's perfect tailwind for us to be rolling out audience builder to new markets. And then the third one is technology improvements. So as I talked around, looking at generative AI and how can that help the business to be more efficient and new revenue streams. And then also we're at the stage now where we've talked about this before. We've been in a 3-year investment phase, investing in our internal technology as well as our people. And now we're at the stage where we are rolling out more client-facing solutions, so seeing additional and new revenue streams coming in. So they're the 3 big buckets that we're looking at in financial year 24. So in summary, and it's really everything we've already said. So international business growing at double the ANZ rate, fantastic, really happy to see that. New audience builder partnerships, so again, that's hitting a really good note with clients and partners and rolling that out. Positive operating cash flow we're maintaining. As Mel talked about, we couldn't do this without the amazing teams that we have around the world, our clients, shareholders, etc. And now with our fearless leader, Linda, on board. So really excited about how that helps us to really supercharge the growth that we see as a company. And then the last point is really to capitalize on those audience builder opportunities around the world. So it's usual growth story and really happy and positive from Pureprofile. And with that, I will hand back to Jane.
Thanks, Martin. Thanks, Mel. I will also invite Linda back on screen now. Martin, perhaps you can stop that screen share for us, and I'll open up the floor to Q&A. As you said, Martin, we do already have quite a few on the list, so thank you to everyone that's popped one in already. Reminder, if you'd like to ask a question, drop it in using the Q&A function at the bottom of your screen. We'll start at the top. So good morning all. On the investment in your commercial team through FY23, do you have a ballpark figure of how many dollars that investment was? How much more growth do you expect that can bring the business before you need to continue reinvesting? That's one for Mel.
I'm happy to take that one. Great question. So we typically, when we bring on new sales capability, the way that we think about it from an ROI perspective is we'll expect within the first 3 months that they'll be breaking even. So they'll be covering the cost of delivering the revenue that they're bringing in, and they'll be covering their salary and wages. And then what we typically see within 12 months is that we start to see them delivering a margin, a significant margin in line with what we would see with the, a lot of our other more established team members. And then by about 18 months in, they'll be really hitting their strides. And the reason behind that is, particularly if they bring in a new portfolio of clients, the clients will typically start off spending a little bit lower, because what they're trying to do is they're starting to trial Pureprofile, ensure that the quality of the work that we do is to a high standard. And then once they're comfortable with working with us, then we start to see more of that revenue coming over. Some clients will see the revenue come really quickly, as we talked about the US client that was brought on at the very start of FY23 is now a top 5 client. So we will continue to see more uplift in revenue from that investment that we made at the very start of FY23. So you will see that, and that will contribute to a lot of our organic growth that you will see in the new financial year as well. That said, we will take the opportunity to invest in a few more heads in the rest of the world during the financial year to help us with our FY24 growth as well.
Great, thanks, Mel. Okay, firstly, message thank you, Finola. Congratulations to Martin, Mel and Linda on delivering on the EBITDA margin guidance of 11%. On the Q4 performance, if we strip out platform from rest of the world, it looks like revenue was down about 9.5%. You've called out challenging conditions in the UK. Was it wholly due to the UK, and have conditions improved coming into FY24? Could Mel also please comment on whether there are any additional costs expected for Pure Media in FY24? Thank you.
I don't know if you want to answer the first bit, Martin, and then I'll answer the second bit.
The first one is, firstly, it's sort of artificial to strip out platform from the different regions, because if you like, that's the fuel for the data and insights delivery. So that's why we now reported, including platform, then platform was a separate line. So important to say that. As we talked about sort of 6 months ago, the US and the UK were tracking ahead of Australia in their slowdown. Now we're seeing actually that that has bottomed out in the UK and US markets. So we're seeing the US and UK markets now start to again grow. Client work is being delivered faster. Orders are coming through faster as well. So from the quotation to the order, which is a key thing, you see a slowdown. That's now not happening. So that's great to see, and we're still obviously very happy with the double-digit growth that we're seeing across all of the markets. So for us, not an issue. We feel with inflation coming down, interest rates feeling that they're stabilized. I think somebody else has mentioned you've now had stellar results coming through from Google, so you're seeing some green shoots in the advertising space as well. That is what we're seeing internally as data and insights. So include platform in those because it's the right way of looking at our numbers, but happy with the double-digit growth we're seeing around the world and the messaging coming out, especially the US and UK now.
Right. And then just the final bit from the question also related to any additional charges coming through in FY24 for the Pure Amplify Media business. The answer is no. We've taken up a full charge in FY23. That said, we had indicated when we closed that business unit that the termination, the cash impact, some of the cash impact will be in FY24 because the final termination payments for the employees will be made across July and August once their notice periods have expired from that perspective. So there will still be a little bit of a cash impact in FY24, but no impact to the P&L.
Great, thanks, Mel. Okay, so FY22 EBITDA was previously reported as 4 million, but now appears as 3.6 in the slides. It flatters the EBITDA growth year on year. Can you please explain the adjustments made here? We've got a couple of questions on this, so we'll try and wrap it up.
Yeah, it's a great question, and it's really just because we're reporting the continuing businesses. So what we've done in FY22 numbers is we've stripped out the impact of the media business so that you can have an apples to apples comparison of the numbers. And that's how it'll be reported in the statutory results when they come out at the end of August. There'll be including continuing business and excluding continuous business. So it's just the $400,000 delta between the two is related to the media business. It positively contributed in FY22, negatively contributed in FY23.
Just on a related topic, Mel, can you just discuss significant items not detailed in the EBITDA presentation, as the cash growth for Q4 is significantly lower than the EBITDA for the quarter?
So the major significant item that's not included in EBITDA is share-based payments, and that doesn't have any impact on cash. As you know, it's when we're issuing equity to employees, So that's the main thing that's always excluded from EBITDA. The only other thing that you'll see when we put the audited results out at the end of August is the termination costs, or the shutdown closure costs of the Pure Amplify Media business. And that was $335,000. As I mentioned just previously, is that some of the cash impact will be in Q4 because we were still paying the employees, but we were not generating revenue. So it did have a negative cash impact in Q4. And then we'll see a little bit of a negative impact on Q1 in FY24. But overall, we'll continue to see positive cash flow.
Great, thank you. Okay, can you give any update on the US partnership for Audience Builder, please? Martin, perhaps.
Yeah, so we have a trial underway at the moment. Don't want to say anything until the trial is completed, but that's been underway for about a month or so now. And there are other discussions as well that we're having with other potential audience builder clients. And so again, with the success that we've had with the new client Shopback, Prograd in the UK, and the talking to and setting up the trial with the new partner, it really is resonating with similar companies to Flybys, etc. in US and UK who have large audiences.
Thanks, Martin. And just while we're here, we might try to knock over a couple of similar questions. So one here, how many members does Prograd have? And another just around, do we have any guidance as to when Shopback deal expansion will be considered in Indonesia?
Two really great questions. Off the top of my head, I do not have the monthly numbers of Prograd. So apologies, we'll take the name and we can send that as email. But again, it's if you go to the Prograd website, they also talk about their numbers. So when I don't have a question in a minute, I might do that and I can come back with a number for you. So that's the first one. And the second question was? Second part.
Apologies. Let me just grab that as well. The second one was related to Indonesia and Shopback. Let me just find that one.
Yeah, look,
do we have any guidance as to when Shopback deal expansion would be considered in Indonesia?
I'd love it as soon as possible. We started with Shopback in June, so we've been up and running for 2 months now. Youngham, who globally heads up partnerships, was out at a Shopback Global conference that they had for all partners in Singapore earlier this month. So we need to do a great job with what we're doing now, show that it generates value for Shopback, understanding insights and revenue, and then it naturally rolls out. So we will let everybody know as soon as we have an update.
Good answer. Okay, so question for Linda. Given your extensive experience in the US and in developing platforms, what are your early observations of the challenges and opportunities going forward for Pureprofile? Oh, we've got you on mute at the moment, Linda. Sorry.
Excellent. Thank you, Jane. I have been on board for about 60 days. And one of the things that I'm working with the team on is, you know, we're just coming to the end of the company's sort of 3-year plan post restructuring, and really working on sort of what is the next 5-year plan. And a key part of that is US growth. And one of the reasons why I was selected as chair was my extensive US background in the loyalty and insights market. And so I'm working with the team on supporting them in terms of laying down the tracks for that growth, because certainly Pureprofile, and one of the reasons why I joined the board, is developed a very strong set of products and value proposition in Australia, and I see real application in the US. So that's absolutely going to be a key focus of my support for the team going forward, Jane.
Thank you. Okay. We might have another couple on the list for you, but we'll come back to those shortly. So, Mel, let's just go back to cash for now. So, increasing cash balance from December is encouraging. Considering that included some one-off costs for closing the media business in UK and Australia. How is the debt refinancing going? Can we expect stronger free cash flow generation in FY24?
Yeah, so the debt refinancing is in progress and we're just investigating a number of different options at the moment. We will be reporting back when we put our audited results out at the end of August, where we're at with that. So looking forward to communicating that to you. Absolutely, we will continue to grow our operating cash flow and you'll continue to see that the cash balance will trend up over the financial year, as you've seen over the last couple of years, particularly as we continue to grow our EBITDA margin.
Thanks. Okay. Martin, you may have already covered a bit of this, but can you just talk about which geographic markets you're seeing a slight slowdown in and others that you think are still growing strongly?
I can do, and Prograd has 60,000 new people a month that use their platform. That was the
Thank you. I'll cross that off my list.
Thank you. Yeah, so look, it's as I said, we first saw US and the UK. Now that's actually stabilized, so we're not seeing a slowdown there. And we've got such low market share around the world that, as I've said before, if we're winning a client and today they've got $80 in their wallet and yesterday they had $100, it doesn't matter to us because we're seeing that $80. So we're seeing that growth still because we're winning the market share. And in actual fact, for the first time ever, we attended a large event in New York called Quirks, which is in our space. And we had a stand and we were both promoting our US and also our UK and Europe business with American companies that wanted to work with us externally. And the message I had from our MD that was over there was we won 15 initially small projects from clients that we hadn't worked with before. So we're investing, we're growing teams, we're investing in marketing, investing in panel, and so we're winning that market share.
Well done. Okay. I'm conscious we're getting fairly close to time. We've still got quite a few questions in the list. We'll get through as many as we can, but for anyone that we don't get to, we can, feel free to reach out to Investor Relations afterwards, or we can come back to you. Just throw in a couple of final ones. So Google just reported better than expected advertising revenue overnight, which I think you mentioned earlier, Martin. What are the green shoots seen in Q1 FY24 so far? Can we expect FY24 data and insight, excluding platform growth, at least better than Q4 FY23 level?
We're not giving guidance at the moment for that, but I think certainly, data and insights, as I've said before, is a much softer landing than you see in advertising. Advertising drops off earlier. It's like the canary in the coal mine for economies. Data and insight doesn't follow that, starts to come back before advertising comes back and then comes back stronger. So we are exactly reflecting and seeing what came out in those Google numbers. The market's definitely picking up, but even so, still seeing 23% growth.
Right. So Mel, perhaps one for you, and again, just on not giving guidance, point that out. Do you expect to continue to build your cash balance in first half 24 and for full year 24?
Yes, we will see an uplift in the cash balance over the year.
Right. Okay. Linda, one for you. So there have been a number of recent board changes for Pureprofile. Do you feel that you now have the appropriate skills on the board? And if not, which skills will you be looking to fill?
So as we're doing our sort of 5-year outlook, we're reassessing the skills that are going to be needed for the company going forward. And certainly one of the things that we're investigating is more US insights background, but that's something that we will do over the course of the year as we get clearer in terms of what the needs are. But yeah, absolutely. You know, we've got, as you know, we have Liz on board, who's got a strong financial background. I've got a global background, as well as quite a lot of experience in the loyalty space. I think the question will be, you know, will we want more US expertise? But we'll come back later in the year with a view on that.
Great, thank you. Okay, we might make this the last question, since it seems like a good one to close out on. And clearly today there's been some preview as to what the full year results look like. But are you anticipating, perhaps for Mel, a negative or positive outcome for FY23 final results?
Yes, so I'm expecting that question is, what's the statutory number going to look like, the final, including everything? So the net profit or loss after tax. So we have indicated during the year that we would still be in a loss position. As I mentioned when I went through what the significant items would be, they have always been our share-based payments. They're excluded from EBITDA, and we haven't reported those today. And then the other significant item that will impact, obviously, the loss position is just the one-off charge for closing the media business. So we will continue to be in a loss position. Obviously, that loss position has come down significantly over the last 5 years. But that's the result that you would expect to see when we put the audited results out. Not expecting any other audited adjustments that that should come out. I mean, we've almost finished our audit at the moment, so there's nothing else. And we never typically have any adjustments from an audit perspective anyway, from what we report.
Excellent. Thank you, Mel. Well, with that, I might now say thank you, Martin, Linda, Mel, for today's session. And Martin, I'll hand back to you for any closing comments.
Yeah, look, I think, again, thank you everybody for joining. Thank you, Jane. Very excited to have Linda on board, and as the future looks, and it's a really solid, stellar growth set of results again from us at Pureprofile, and with the teams and the people that we have on board, every investment that we've made and all the predictions that we've made and said have come to fruition. And I'm particularly delighted with that all of our messaging is consistent to the results that you've seen today. So thank you everybody for your support.
Excellent. Well, I'll add my thanks for everyone for joining, and with that, invite you to disconnect. We look forward to keeping you across Pureprofile's progress. Have a good day.
Cheers.
Thanks.
Thank you.